Because when you have these like little candles, there's so much whippiness in it that even as a day trader, it's hard to even figure out like, am I going to get the bounce? Because remember, as a day trader, you're getting in and then you got to get that bounce fast because you're using more leverage in day trading in general. The idea is like as a day trading stocks, for instance, I did a trade today and I just made 50 cents on a stock. Yeah, so I'm kind of the same thing. There's not right now a lot to do in crypto. I mean, believe it or not, the stock market is where the action is right now. The tech stocks have been ripping recently. Today we're seeing a big drop after the non-farm payrolls number, as it shows. Honestly, it was a really strong number, and so investors are now worried the Fed is going to go back to hiking aggressively because it's so strong, and the markets don't like that. It's funny because you'd think like a strong number, oh, the economy's great, like yay, the market should go up, but instead it's selling off today on that because the Fed is going to be tougher. But for me in crypto, I haven't really entered a new trade in a couple weeks. I was taking some profits on the recent rally off of the 2017 highs, but again, my gains kind of are the same. It's like, in a bear market, when you go long, you can't be too greedy, right? So I look for 10%, and really in crypto, 10 or 15% is not that much. But in a bear market, I found that it lets you rebuy basically at the same or a better level afterwards, which is really the best, right? I mean, if you could just buy at 20,000, sell at 22, rebuy at 20, sell at 22, you can just do all these fun rinse and repeat type trades. And that's really in a bear market what you got to do. I think a lot of people, they get stuck on that kind of like, oh, crypto went to 69,000 last year, so maybe in a couple months it'll go back there. But a bear market will kind of make you pay for that mentality in the near term. So yeah, I mean, so basically you can just see this amazing, I mean, by the way, parallel trend lines are like my new favorite tool. I'm finding them every which way and they work so well. And so, talking to everyone watching here and listening, if everyone used them, they probably wouldn't work as well. So you guys I don't really talk about it much. It's like Fight Club. You don't talk about it too much when it works. But you can see how, again, you just connect these lows and then you take a parallel and this is a perfectly parallel line. And essentially, if you were just buying here and selling up here and then buying again here and then selling up here, I mean, you just kind of do a little rinse and repeat over and over again. Yeah. It's important to recognize that this is a bearish pattern. So eventually I do worry that at some point we're going to have a breakdown where this really starts to drop dramatically down. And I still have a 12 to 13,000 target on Bitcoin before I think we might get a bottom. But really, again, you could see how the market kind of played with that 2017 high. And a lot of people were kind of surprised we pierced 2017's highs and got down to like 17.5. But remember that the market psychology is to whip the most people out of a trade. And so going into that, as we were coming into that 20,000-ish area, everyone was like, oh, I'm going to buy the 2019 high. That's going to be the bottom. Well, guess what? The market knows that, and it's going to flush it through to kind of make those people stop out, think it's collapsing, and then they'll bounce it afterwards. So one of my favorite things, if you put out stops on trades, is never put it out at like an obvious level. They do. You're right. And listen, when you're trading with leverage, that's a whole new ball game. I don't personally trade with leverage. Even in stocks, I do use leverage in stocks like 2 to 1, and day trading you get 4 to 1. But I mean, I don't even know how people do like 100 times. I mean, that's just, the margin. I think like 5x is reasonable, but yeah, I think you're so smart in terms of like hating on it because, think about a pro, right? Like I consider myself, I've been doing this 20 years. I've been trading stocks mostly. Now I'm in crypto, trading crypto. And if I don't feel comfortable, doing a great setup that I think has an 80% chance doing even like more than 2 times leverage, like what are the odds that someone that has almost no experience is going to be profitable doing 5 or 10 times leverage even, In fact, that's exactly what I do as well is once you get to 4, you get to kind of like, think about 4 as a yellow flashing light. Then once you get to 5, it's like red flashing light. So I'm in agreement with you on that. And I think you're right about, understanding, not only the leverage side of it, but also understanding like how important in bear markets, getting to the bottom of like your emotional control. And when you do leverage, right, and you brought this up briefly, is that leverage is going to make you more emotional because you have more on the line. And the key is understanding that any market, stocks, commodities, crypto, markets will push you to extremes. And if you're already emotional when you get in a trade, the emotional aspect is going to get much more kind of, magnified. And you're going to make the wrong decision at the wrong time because of that emotional nature. So I always say to people, like, if you want to become a millionaire with just $10,000 or $20,000, even $5,000, it's really that slow and steady progression. Because if you try to do it too fast, the emotional kind of pitfalls will catch you, and then you'll blow up your account, and then you're basically at zero versus even at $5,000 or $10,000. Yeah, I mean, honestly, I haven't done a day trade in crypto in a really long time. I'm all about the swing trades right now because when you have these like little candles, there's so much whippiness in it that even as a day trader, it's hard to even figure out, like, am I going to get the bounce? Because remember, as a day trader, you're getting in, and then you got to get that bounce fast because you're using more leverage in day trading in general. The idea is, like, as a day trading stocks, for instance, I did a trade today, and I just made 50 cents on a stock, but I did enough shares where I made a couple $1,000. So yeah, let me do the spiders here, my spiders trade, okay, and then we'll talk about the JPM trade. So basically, there's something called a gap fill, right? Gap fill basically is where a stock, in this case, or a crypto, would open sharply lower or higher, and when it retraces to that previous closing level. And with crypto, it's a little harder because you don't get daily closes. But what you can see right here is that basically the spiders opened, the S&P opened sharply lower, and look at this massive rally back. And here's where yesterday closed. And basically, look at how price went right there to the penny. And then look at the sell-off. So basically, shorting it right there is a high probability trade setup. In addition, look at this trend line. Yeah. I love when two trend lines converge. Like it's like someone saying, "Hey, this is a good trade," and then someone else is like, "This is a great trade." Like you combine forces. Like think about like superheroes, right? Totally. If you had Superman and Batman working together for you right here, those are like two trend lines going together. So this is like what was just an amazing trade. Now, I got out of it too quick as a day trader, but you just never know. Like it could have pulled back and then ripped higher. For me, it's just like short it here and then get out right down here, make a couple $1,000, be done. You focus more on the smaller time frame. Swing traders would be more on the daily chart. If you're a long-term investor, honestly, monthly, weekly charts, probably the most important to you. Okay. Yeah. And then on JPM, we could take a look here. And this, honestly, I could have ended up making money on this. So JP Morgan was holding up at the highs as the market was collapsing down. So JPM closed yesterday here, had this unbelievable surge up here. So I got in the trade on the short right up here. Major surge up. You have a 4-bar surge. I was in the money, then I was out of the money, then kind of stuttering here. But my concern at this point was that the market was already all the way down here. The stock market had already collapsed down. And so in my mind, I'm thinking, you know what? This isn't falling and the stock market's falling. What if the stock market bounces? Then this thing's going to start ripping to new highs. And so I took a small loss. It turned out to be a 35-cent approximate loss on it. But it's just one of those things where as a day trader, you are always calculating risks. Yeah. So what's my risk of staying in this trade versus taking a small loss, right? And I think that's super, super important to do. In all trading, by the way, you always have to be looking at risk versus reward with the setup that you're trading.